Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. Shall we start here on the daily? Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been bigger. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your weekly morning show where we bring you the latest in everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about the major crash that is going on right now on Bitcoin. People are getting very, very much sick and tired of this corrective movement. And in today's video, we're going to talk about where the bottom is, why we are here, and what we ought to be doing right now. I want to discuss a couple of different concepts. One of the concepts I want to discuss is the difference between dollar cost averaging and lump sum investing. We've seen a lot of people asking whether or not they should be setting one of these up or the other one. And so today we're going to be discussing that, but we're also going to be discussing where the bottom is for Bitcoin, what the next several months look like, and of course, answering your questions as always. So welcome to the stream. If you are new here, my name is Jeb McAfee. I love helping you guys achieve something that we call financial sovereignty, which is a state of being where we have total and complete control over our wealth, lest it control us, because either your finances will serve you and your family and their well-being, or you will be a slave and a servant to your money. And I'm going to show you how to get out of the rat race that the rest of your countrymen and women are in right now. The vast majority of people in this country are slaves to money, and because they are slaves to money, they are slaves to different kinds of people. Because you have no money, you're a slave to a boss that you don't like. Because you have no money, you're a slave to your credit cards because you can't afford to live without them. Because you have no money, you are a slave to a mortgage that you don't want because you don't have the money to sell the property because you couldn't afford the closing costs. It's a mess. And if we don't clean up the way that we handle money, then what's going to end up happening is it's going to wreak havoc on our entire lives. Ask me how I know. I spent the first 20 years of my life backwards with finances, and it screwed me over at every turn. And so I have a God-given mission to help you guys and families around the world achieve financial prosperity through financial sovereignty. It's not as simple as bowing your head and saying, God, pretty please, will you let me win the lottery? It's not that simple. You got to put the work in. You got to put some elbow grease in. You got to make a change, man. You got to look in the mirror and say, my will, God's will, be done on this money. I'm tired of the mess. In the words of Les Brown, I'm sick and tired of being sick and tired. I'm over it. I'm done. I've had enough. At what point is it going to be such a freaking mess that you say enough is enough, we're going to change? At what point is enough where you say we're going to buy some Bitcoin, we're going to have some financial security, we're going to build our own strategic Bitcoin reserve? At what point are you going to say enough to debt? Enough going out and spending every single penny of my paycheck on Friday and being broke for the rest of the 2 weeks? At what point are we going to make a difference? That point needs to be now, because you've only got so many days in your life. Whatever it is in your life, whether it's money or not, if it's not running the way that it needs to be, now is the time. Yesterday was the time to get started. Today's the second best, so let's get started. Let's get this show on the road, and let's get our heads screwed on straight, because at the end of the day, you only get one life, and it's yours to make something out of or screw up, and you've got to live with the consequences, whether good or bad. Welcome to Alex Nybo into the chat. Mike Lowry's in chat. Q Cheyenne is in chat. Crypto Carter, Wreck the Bears, Queen, Philly Skills 1428, Shaq with the combo. Shaq with the number 7 combo coming in. RK's in chat. Chuck Taylor in chat. Said, dang, dude, did you run across the carpet with your head? No, we were on the playground with the kids for like 5 hours on Saturday. And how did he hurt his head? I didn't hurt my head. It's a sunburn. No, I'm all kinds of burnt. It's the squat in me, right? We're used to the highlands where there's no sun. It's always cloudy. So Forgive me for looking like I took a rug out on a date, or like I dumped tomato sauce on myself. Forgive me for that. I can't do much about it. It's just gonna have to go away on its own. Bitcoin's currently trading at $81,500, $81,300, $81,500. Look at that. It keeps changing. It's almost like the markets move 24/7. One of the things we love about Bitcoin. Now, this means that Bitcoin's market capitalization stands currently at $1.6 trillion. I think it's very important that we begin with some perspective. We're whining and moaning and complaining as an industry about the drop that we've witnessed over the last, 3 months from our recent highs at $109,000. It was not very long ago that this level at $81,500 was an astronomical price target. It's not that long ago that we were looking at $81,000, $80,000 as our next major level of resistance after we would break our all-time high at $73,800. And now we want to whine and moan and complain about it and forget our perspective. It was 4 months ago. It was 4 months ago that we first broke through $81,000. We're going to talk about all kinds of markets today. This is going to be an amazing stream. I cannot wait. Let's go ahead and clear our chart. Kind of been enjoying doing this lately, starting with a fresh chart. Bitcoin's correction has been very scary for a lot of people, and understandably so. Over the last couple of months, we've had a lot of new people come into the industry, and I'm very excited about that. I love it when new people come into the industry. I love it when new people come into the industry. But something that new people need to understand is that Bitcoin is extremely volatile. See, I've been in the space for 8 years, but I still remember back in my infancy, back when dinosaurs roamed the earth, back in the 50s, as my father-in-law says, back in the 50s, when I got into Bitcoin and I went through my first correction, and I thought I had it all figured out. I'd been in the space for 2 whole weeks, so don't you know I'm a Bitcoin savant at the time. I'm an absolute rock star genius, everybody who knows absolutely everything, and I thought Bitcoin was going to bottom out at $4,300. And then Bitcoin went ahead and dropped from $5,000 all the way down to $3,000, and I thought to myself, oh, man, how's that for a dose of humility? Bitcoin goes through a 40% drop. My word, that's a big drop. 40% of your portfolio wiped out in 2 weeks. Jeez. Thought that was a big deal. Kind of freaked me out. I remember also when I first got into the Bitcoin space, I bought Bitcoin Cash because I was an idiot. And I decided that when Bitcoin Cash came out, I was going to buy it. Let's go BCH over USDT. I remember when Bitcoin Cash came out. Let's see if I think it was on Coinbase. I think I bought it on Bittrex. Yeah, back in the day with Bittrex. Yeah. I remember when I bought Bitcoin Cash, I thought, oh man, this is going to be the next big thing. And I bought it up here in December. That's right. I bought it in December at the top. Immediately regretted that decision. Bought like $10 of it. Lost 9 of them. Learned my lesson there. So I get it. I understand where the new folk in the space are coming from. I understand some of you guys are newer into the space, and I understand people are freaked out. But I want to give us some accurate perspective. Where we are right now, $81,000, 129 days ago was the all-time high. That's 4 months ago. So let's get some things straight. This is not the end of Bitcoin. This is not the death of Bitcoin. What we're about to talk about the idea that Bitcoin is probably not done with this correction, is not the end of Bitcoin. You've really got to understand that. By the way, somebody's asking about the titles. The reason I title the videos the way that I do is because I'm titling them around what people think so I can bring them in on their irrational fear and let them leave with logical, sound thought processes. Where's the bottom for Bitcoin? Bitcoin crash continues. You know why I made that title that way? It's not because I feel that way. It's because you feel that way. Not you in specific, but you, the audience in general. There's a lot of people in the audience who are thinking, oh my gosh, Bitcoin crash continues. What's going to happen? And they tune in, and then I can give them a dose of reality and help them calm down. That's kind of what I do. I help bring peace to people. That's my whole job as a financial coach. I don't want you running around with like a headless chicken. It doesn't help. So with all that said, we've got the perspective. We understand that a lot of people are very scared right now. What should we do about that? Well, as we often say, should we say no emotions in trading? Nay, absolutely not. Absolutely not. If you've ever had that advice, keep the emotions out of trading, that was stupid advice. It is very common in the cryptocurrency industry, and it's dumb. Let's apply that logic to anything else. I just bought a $3 million Bugatti. Put 1% down, hypothetically, put 1% down. I now have $2,970,000 worth of debt, and I make $80,000 a year. I'm kind of scared. Well, no crap, Sherlock. Since you drove it off the lot, you just lost $600,000 of value. You should be scared. Okay, let's apply the logic further. You're walking down the road, and as might happen, a lion jumps out at you, tries to eat your face off. Oh, but I'm not scared because I don't have emotions while I'm walking down the road. Oh, I don't have fear while I'm walking down the road, don't you know? In crypto, I learned from this influencer that I shouldn't have fear while I'm trading. I shouldn't have emotions while I'm trading. So I'm just going to let the lion eat my face, and I'm just going to be cool with that. Okay, let's continue. All right, Doc, I just had a heart attack like 10 minutes ago. I'm kind of scared that something might happen. And then the doc says, heart attack, smart attack. You need to quit worrying so much. You need to, here's one that half of you that have ever been to the doctor and have ever been to a hospital where they tell you this you're gonna jive with this. Stop stressing so much. You need to lower your stress. You need to just stop worrying about it. Oh, well, thanks. Gee whiz, doctor. It's not like I just had a freaking heart attack or anything. I guess I should just calm down. Right. So let's apply that. Let's continue to apply that logic of we shouldn't have emotions. If you came into the stream today afraid, I want to validate that fear. There might be a good reason why you're afraid. Maybe you're overextended. Maybe you're in a bunch of debt. Maybe you're living on more than you make, and the fact that Bitcoin's market is going down means that you now are going to have to liquidate Bitcoin to cover your basic operating expenses for your life. Maybe you are not generous and people don't like you for some reason because you are just not kind. Maybe you are not financially sovereign and your financial picture is a total mess. Maybe this market crashing and the fear that it's bringing is supposed to shine a light on an issue in your life, and I can help you, and our community can help you, and the scriptures can help you, and our teaching can help you get that right. Maybe this crash freaking you out is supposed to show you that something in your life needs to change. So let's go two directions here. Let's start with the technical analysis. That's what a lot of you guys are here for. Let's talk about where the market's going. That's important. But let's also talk about where we're going. Because as we talked about before, we quoted Teddy Roosevelt yesterday, it is not the critic who counts, it is the doer of deeds who's actually in the arena who counts. Why do I say that? The reason I say that is because it's not just about the person who has some cool thoughts about who could have done better. It's about action. It's not just about thoughts and banter. It's about action. So let's think about where the market's going, and let's have our philosophical fun around the campfire singing Kumbaya, and then let's actually do something with it, because there's way too many people in the crypto space that have a lot to say about where Bitcoin's going, and they got absolutely nothing to say about what you ought to do about it so you can build some wealth. That's why you're subscribed to this channel, and that's why you watch this stream every single morning. Let's do it. Let's do it. I'm very excited about this drop. You know why? Because Bitcoin always drops back to this uptrend during this bull market. We are currently sitting right above the support level that underpins the entire Bitcoin bull market as we speak. This uptrending level of support is very powerful. It shows up on the logarithmic chart, and it gives us a support zone right beneath us. Let's establish this support zone because it's flipping beautiful. We've got former resistance sitting here at $73,800. We've got an uptrending level of support sitting right here. We've also got the point of control on the visible range volume profile sitting at $67,500. We've also got out on the weekly chart a couple of different trend lines that are giving us support. The main one being I believe I'm wanting to show you the 200. Let's show you the 100 actually. I want to show you the 100 simple moving average. The 100 simple moving average out here on the weekly is sitting down here at $56,000, but actually I take that back. It's not the 100 I want to show you. It is the 50 I want to show you. Let's go ahead and give you the 50. Let's give the 52. That's the 1 year moving average. You can see the 1 year moving average is sitting right here at our current level of support at $75,000. So we have a plethora of support levels sitting right beneath us. We've also got the 20 monthly exponential moving average sitting directly beneath us. It currently resides at $67,000. So, quick recap. I like to move through this quick. There's no point in being long-winded. We've got an uptrending level of support. We've got the 1 year weekly moving average, which is the 52 weekly moving average. We've got the 20 monthly exponential moving average giving us support. We've got the previous all-time high at $73,500, and we've got the point of control at $67,000, $67,500, all giving us support. All of that support is in a range between $67,000 and $75,000. Is the floor falling out from Bitcoin? Is the bull market over? Categorically speaking, there is absolutely no technical proof of that whatsoever. At all. At all. Are we in a correction? Yeah. Duh. Doesn't mean the bear market's starting, and doesn't mean the bull market's over. Nope. It means that the bottom is probably within the next 3 weeks or so, 3 to 4 weeks or so. And the break above $91,000 will likely be occurring in about 8 to 10 weeks or so. The bottom for Bitcoin, therefore, probably looks something like this. And we're going to turn around and bounce later on towards the end of May. We are currently projecting, we said May 25th, but for simplicity, let's just call it May 31st so we can just keep it simple. May 31st. By the end of May, I project that Bitcoin will be breaking back up above $91,000. Michael Saylor, a man who I have met and interviewed, but I also, and I have a great deal of respect for, believes that we'll be back at $100,000 before the end of March, unless he knows something fundamental that I do not. I don't believe he's correct on that. If he's just going based off of market structure and everything, then I don't think that's going to happen. Now, for all I know, the United States federal government is about to buy 400,000 Bitcoin, and then I could be and then, Michael Saylor might know something I don't. But short of that, I don't think that's going to happen. What we did see, however, is that we saw that Bitcoin was in a symmetrical triangle pattern yesterday. If you'll recall from yesterday's stream, we discussed how Bitcoin was in a symmetrical triangle pattern that looked like this. It was starting to get squeezed very tightly here, and Bitcoin was going to need to have a breakout. Well, that breakout, as we predicted, has been a bearish breakout. We have dropped to the downside pretty aggressively, and that has led Lux Algo in the direction of a bearish confirmation here on the 4-hourly chart. Haven't pre-analyzed this, but I can tell you right now there's going to be one. Yep, there it is. We can see this sell signal has come into play right here. We drop below the trend catcher, which means that Bitcoin is very firmly in bearish territory. We are also probably wiping out some longs because a lot of people foolishly thought that this was a bottom. It wasn't. This was never a very steep uptrend. It was a very shallow uptrend against a much steeper downtrend. You can see if you just we just turn all of our indicators off here for a second, make this a little bit easier to see. You can see the degree of the downtrend here, much steeper than the uptrend. You're looking at about a 90-degree angle right there, right? About a 90-degree angle right there. The uptrend is much shallower than the downtrend is deep. This was always a bear flag, and as such, it being a bear flag means that it's probably going to drive us lower, most likely down here towards $69,000. That being said, there is extremely powerful support at $73,900. So this bear flag that we're looking at right here, bear flag, almost looks like a foot, right? It looks like a foot in like a cast boot, right? Is probably going to drive us down towards this uptrending level of support. So that's where the market stands right now. We could also, and here's something else to consider, it is possible that Bitcoin finds, let's go ahead and leave some of these drawings here just so we can kind of keep a visual. It is also important to remember that Bitcoin does have support down here at the roughly $80,000 range. So it is possible that instead of fulfilling that bear flag, that Bitcoin could fall down here to the $80,000 range. So that's something to watch out for. Very much in the cards. Could definitely happen. So stay tuned. We could drop down to $80,000 and bounce, or there is definitely an opportunity that Bitcoin could fall lower. So let's do a little bit more analysis. One thing I want to keep in mind here are the kind of medium-term timeframes, Lux Algo indicators. You can see Lux Algo has been in a confirmed downtrend ever since here. That's right. Lux Algo called this entire downtrend right here. We were right here. We had the sell signal come into play, and then you see trend catcher turn red. You see that trend catcher is red? Well, the way that we do this is we have to have these sell signals, so we can kind of have our sell signal right here, right? It looks like this. This is our sell signal. And then we have a trend catcher red, right? When it goes from sideways to down, then that is our confirmation. So when we have both the red sell signal and we have the trend catcher bearish, when both of those occur, whichever one happens second, so if it's the signal that happens second, or if it's the trend catcher confirmation that happens second, whichever one happens second, then that is most likely the one that then that's going to give us confirmation of the corrective movement. And so we saw this red trend catcher come into play right here. We've been under that trend catcher confirmation for a great number of weeks. For over 36 days, Bitcoin would go into a downtrend as a result of that. That's something that we've been talking about on the channel for a very long time. Ever since we hit 109,000 and we dropped back down here, it was about right here, like February the 3rd or so, when we dropped back down to 91. That's when we were more or less telling you that Bitcoin was going to go back down to 73.8. People did not like that. They were not very happy about that at all. But there was something different about that corrective movement. It was a very, very large correction, very out of character for a continued uptrend. So make sure that you keep in mind that the correction is probably not completely over. A bottom around $80,000 would make sense, but a bottom as low as $73,800 or even a bottom potentially dropping down to $67 is still very much in the cards. In the next 2 to 4 weeks, somewhere around probably about 3 weeks from now, early April, is likely where we're going to have some kind of confident bottom. Big shout out to old friend Kelly Kellum, donating $5. Said, "What's up, fam? Sending love from Atlanta. Take advantage of the price dipping. Future you will appreciate it. Big love to you, Jeb." Big love to you also, Kelly. I got to come visit you, man. We were just in Atlanta the other day. We drove past it. We drove through Atlanta on the way to Nashville and the way back from Nashville. So good to see you, man. Good to see you. Thank you for tuning in. Still got the Blue Ranch, still the moderator. Everybody, make sure to go subscribe to Kelly. Especially make sure to follow him on X. He's very active over there. I see his stuff all the time. I'm very active on X. I'm always scrolling X and looking at something. It is my social media platform of choice. So see Kelly over there quite a bit. Definitely make sure to go and follow him. 39K followers. Wow. Holy cow. Jeez. Good job, man. Yeah. Awesome. All right, let's read a little bit of chat here. Who's saying what? What is going on? There's some very interesting fake news going on in the chat. I don't know. We'll see. All right, let's read a little bit of chat. Hey, before we do, I want to let you know there are some pretty solid deals on Lux Algo here. If you've not already signed up for Lux Algo, you definitely need to. Lux Algo is the most powerful technical indicator I've ever used. That's why I use it in my analysis every single day. Whether I'm doing analysis on screen or off screen, I am always looking at Lux Algo to help me figure out when the next trend reversal is coming. It's amazing. Lux Algo right here confirmed October the 14th that we were going into a major uptrend. That was a full 3 weeks before the election. And a typical uptrend that would follow from a bullish cross like this, where we have the trend catcher green and we have the green green signal here, the buy signal, was typically going to be probably about 40 to 50%. So Lux Algo was telling us that Bitcoin was going to rally 40, 50, 60, 70% way before Donald Trump ever got elected. So it front ran the election results. We also saw the same thing happened over here. We had the green trend catcher come in here, traded sideways. When we started moving to the upside, you had the buy signal come in. From that buy signal, you could see that Bitcoin would go on to run 147%. So Lux Algo, it's such a powerful indicator. A lot of times it almost looks like it's telling the market what to do. It's not. It's just very good at front running the market. It's not repeating. It's not giving you information that's outdated. It's very, very serious. It's very good at, like I said, front running the market. So if you haven't already, make sure to go to luxalgo.com. and use coupon code JEB. Actually, use our affiliate link down below. You'll get a discount. But use the affiliate link down below to go to Lux Algo. When you sign up, use coupon code JEB. That's JEBB at checkout. And you will be getting access to Lux Algo on a discounted rate. Really quickly make sure that I'm giving you the correct discount code, but I'm pretty sure that's right. Just check. Yes. Going to check and make sure that we've got the correct link down there. Give me 1 second. Yep, that's right. So make sure to go ahead and use that link in the description box down below. It helps to support the channel, and you'll also be getting, I think you'll also be getting a discount by using that. So yeah, use coupon code JEB at checkout. That ought to work as well. Let's read a little bit of chat, and then we'll keep it moving here. We're going to talk a little bit about dollar cost averaging versus lump sum investing. Kelly, I'd love to hear your opinions on that in the comment section down below. What do you recommend and why? Queen's in chat. Good morning. People are saying Rogan was that his life ended. I don't believe that's true. I just haven't seen anything about that. Hope not. I don't know. You know what? Here's what we'll do. Grok is amazing. For any of you guys who don't know Grok, he's the artificial intelligence over on X. Is Joe Rogan okay? Should be able to scour the internet and figure something out real quick. Is Joe Rogan okay? Let's ask Grok if Joe Rogan's okay. As of my last update, there's no public definite information indicating that Joe Rogan has experienced any significant health issues as of March 2025. Okay, so if there were any reports anywhere online about Joe Rogan being dead, I'm sure that Grok would have been able to find that, so that does sound like fake news to me. All right, are we in a bear market or still a bull run? We are not in a bear market until Bitcoin breaks below $67,000. I very much don't believe that it's going to be a break below $67,000, and I am quite confident that we're going to be able to hold that level. So no, I don't think we're in a bear market. I do, however, believe that these levels are excellent to be accumulating at, which is why we're going to talk about the difference between dollar cost averaging and lump sum investing. I'm going to show you what we do, tell you what we do, and then we're going to move on from there. Now, we got to talk a little bit about the Fed meeting that's happening tomorrow. So here's the issue. You're almost certainly not going to be getting a Fed rate cut tomorrow. Very low probability. CME Group, their Fed Watch here is very powerful. This is something you ought to bookmark. CMEgroup.com. Let's see, CMEgroup.com/markets/interest rates /CME FedWatch tool. So that's not very helpful. That's kind of a long link. But just type in FedWatch, CME FedWatch. Here's the reason that you ought to listen to these guys. CME Group is the Chicago Mercantile Exchange. In other words, they are the group that runs one of the largest exchanges in the entire world. Like, it's number 2 or number 3 after the New York Stock Exchange and NASDAQ. I think it's the 3rd largest stock exchange after those two. So CME, huge group. A lot of economists work on this, a lot of tie-ins. They know the people at the Fed. So they're pretty solid at predicting whether or not there's going to be a Fed rate cut or not. They're predicting that there's not going to be a rate cut with a 99% confidence. That being said, that starts to change as you move further into the meetings. There's a meeting roughly every 45 days of the Federal Open Market Committee, which is the group of different Federal Reserve chairs that monitor and make decisions for the Federal Reserve. The FOMC meeting in May, they're giving a 19% likelihood of a 25 basis point rate cut. The meeting in June, they actually then expect that a rate cut will be coming with greater probability and a slight possibility of a 50 basis point rate cut by that point in time. And so a major correction is a major drop to interest rates are likely coming. And a lot of that probably does have to do with Donald Trump. Let me see if I can find a chart on this. Let's see if I can find a chart for this. Actually, you know what? I bet Grok will be able to help me find a chart for this. Oh. Let's see. Yeah, you know what? Let's see if Grok will be able to find this. I bet Grok can do it. By the way, guys, Grok is very helpful at finding information. Here we go. It doesn't find a chart, but it found the data. Print me or find me a chart. You can find this chart right here. Check this out. This is the amount of money that the United States federal government spent on the interest load for the debt. Keep in mind, United States interest was very, very low. Very, very low for a very long time until COVID. And then obviously it takes a little while for the national debt to be refinanced because a lot of it's in the form of treasuries, and the treasuries last several years, so it has to be refinanced. So in 2021, let's see if it built a chart here. This might have a chart. Let's see. Let's see. Here we go. This is the chart I'm looking for. Bank of America Global Research put this out recently. This is what I was having Grok try to help me find, so it helped me find it. This is the amount of money that the United States federal government spends on the interest for its debt on treasury payments. So if you don't know, the way that the government finances the debt is it issues treasuries. Whenever you buy a treasury, you are literally loaning money to the government. You are acting like the bank itself, right? You are loaning money to the government. Between 2021 and now, the annual expense for U.S. debt has increased from $500 billion to $1.2 trillion. And the reason for that is because the treasuries are issued at a rate that is typically tracking with the Federal Reserve's interest rate. The Federal Open Market Committee sets the effective federal funds rate. The effective federal fund rate underpins the rest of the market rates, including the treasury rates, because the treasury rates have to stay competitive with the banks, or else the government can't borrow money from the American people to issue the treasuries and raise money for debt financing. So it all plays together, right? I know that was complicated. Hopefully you can track with me there. The issue is when the Fed raises interest rates, it's naturally going to raise the cost of the treasuries because, well, the United States government's in debt. Just like the rest of us, when interest rates go up, the debt gets more expensive. The same thing happens to the government, right? That's a more simple way to explain that. And so what you're seeing right now is the Trump administration is putting a lot of tariffs out there into the market. They may or may not be intentionally trying to crash the U.S. stock market. I'm inclined to believe that there might actually be some intentionality behind it, like kind of a strategy of crashing the market. The tariffs were always going to crash the market. We've said this from day one. The tariffs that are going on right now were always going to crash the U.S. stock market because it's going to drive inflation. When you have a crash like that going on, there is a high probability that the Fed will be forced to lower interest rates to stimulate economic activity to bring the market back. Because the Federal Reserve has a few mandates. One of them, they've got a dual mandate to keep inflation low, but they've also got a mandate to keep unemployment low. And if the stock market keeps crashing, then theoretically it'll impact employment in the short term. The bet is in the long run, the tariffs will play more into expanding the U.S. labor market, but that is a long-term play. So short-term, there are macroeconomic factors, and there's also potentially political factors coming from the Trump administration to try and force the Fed to drive interest rates down. Now, the reason that this is important is because we're having a Fed rate meeting tomorrow, and Jerome Powell is almost certainly going to be discussing this from the podium. Tomorrow's Fed meeting is going to be a very important one because this is the first time that we're going to see Jay Powell discussing the fact that the United States' debt has skyrocketed. Now, we don't know for sure that he's going to address this. He probably won't. But what he probably will address is the recent crash in the United States stock market. He probably will address the tariffs, and he probably will just address all these things. So we'll have more information moving forward about what the Fed's policies are going to look like over the course of this year. But what I will tell you is that CME Group is projecting that there is only a 3.8% chance that we don't have some kind of rate drop by the end of this year. They're projecting that there's only a 20% chance that we have anything less than a 50 basis point rate drop. They're expecting with an 80% likelihood that at least 50 basis points, 0.5%, is reduced, potentially even 0.75%, 75 basis points. This is important for us because it's going to most likely drive a massive rally on U.S. stocks, and it also fits in with the Bitcoin narrative because as the stock market rallies, which we're excited is going to be coming later on this year, it's basically priced in. It's basically guaranteed. You can see it coming. That's why we just bought a big lump sum of stocks. We also buy lump sums of Bitcoin. We're going to talk about DCA and all that in a minute, how to do this, because we see what's coming. We want to prepare for it, right? It's not the critic who counts. It's the doer of deeds who's actually in the arena, right? It's not the person who just sits here and has vain thoughts and repetitions. It's the person that actually puts some freaking skin in the game. I don't care what you think you know about the market if you're not actually playing in the market. I don't want to hear it. Jeb, I know everything about what... Okay, let's see it. All right, let's see it. I got people in the chat all the time. They're like, oh, Jeb, what about this? Please, tell me what you think. But before you go getting all critical, let's see the results. We've been doing this for 8 years. We've done it the wrong way, and we have learned to do it the right way. So make sure that the people that you're listening to have some proof in the pudding, right? All right. Now, if we understand that the rate market is probably going to drive a rally later on this year in stocks, which will likely lead into Bitcoin, then we need to prepare for that. Now, one last thing before we get there. USCBBS, United States Central Bank balance sheet. As you can tell from this chart, the downtrend is slowing down. Now, I'm going to be getting more information on this, but the Federal Reserve is slowing its rate of quantitative tightening. QT is a process by which the Federal Reserve rolls off its balance sheet. So, a quick history lesson. Quantitative easing is this. Quantitative tightening is this. What's the difference? Quantitative easing is the process by which the Federal Reserve literally makes money up out of thin air to buy one of two assets. T-bills? T-bills? Or MBRs, MBS, mortgage-backed securities. During quantitative easing, the Federal Reserve is using fake money. They literally type a number into a computer. We're going to buy, I don't know, $1 billion of T-bills. We're literally going to send $1 billion to the Treasury, and that money came from nowhere. There was an output, but there was no input. It's literally made up money. So either they buy treasuries or mortgage-backed securities. So here's the difference. Buying treasuries is essentially a way that the United States Federal Reserve can fund the United States government with money that doesn't exist. When you purchase a treasury, remember, what happens when you buy a treasury? You have dollars, or if you're the Fed, you don't. You have dollars, and you swap them for T-bills. You use dollars, or magic internet money. We're not talking about Bitcoin this time. And you buy T-bills. What happens? The government gets the dollars, you get the treasury, and you get a promise of interest because you're loaning money to the government. So when the Fed goes through quantitative easing and buys treasuries, they are literally making up money and loaning it to the United States federal government. This is where the vast majority of the U.S. debt is housed. In fact, let me just pull up some information for that. How much money does the U.S. government owe in treasuries? If I'm going to guess, I'm going to say it's probably about $18 trillion. Let's see. Not sure if I can find this data very quickly. I don't want to waste time, but it's definitely going to be more than $10 trillion. So let's see. Let's ask Grok. Let's see if Grok can come up with that information. I love this. Grok is very helpful. For any of you guys who are like, oh gosh, don't use AI. Guys, it's very helpful. Let's see if Grok can give me a quicker answer on this than Google. I don't use Google anymore. I use Grok. I love Grok. How much money does the U.S. government owe in treasuries? $36 trillion, right? Let's see. The portion owned to external investors, including individuals, also in treasury securities. So the number, I'd have to kind of look at this a little bit closer to get you the exact number, but it's somewhere between 7.4 and about $28 trillion in treasuries. So, and the reason that happened, great, I just closed my chart. Let's pull that back up. The reason that happens is because the government raises money through the treasury, through the issuing of treasuries, T-bills, to raise money to finance government deficit spending. The Federal Reserve, let's get our chart back up here. The Federal Reserve prints money out of thin air to buy the treasury. So the Federal Reserve now holds the treasury, and they've loaned the money to the government. The good news is, theoretically, when the treasury expires, because you can buy a treasury that lasts a day or you can buy a treasury that lasts 30 years, but theoretically, when that treasury expires, and the Federal Reserve gets the money back, the Federal Reserve can go right ahead and delete the money again. And that's how you roll off and go into quantitative tightening. When they get the money back at the end of the term, at the end of the term, then the Federal Reserve can go ahead and let the money disappear into thin air again. That's called rolling off of treasuries on the balance sheet. It's how you roll off the balance sheet, which is what is happening. That's why this number is going down. That's why we're going through quantitative tightening. As the treasuries expire, they're not buying them again, which means the government is now having to raise more money from the investing public rather than from the Fed, which is less inflationary. It's still inflationary, but it's less inflationary because it's happening with real money. Now, on the mortgage-backed securities front, this is how you loan money from, if you're the Fed, this is how you loan money to the federal government through T-bills. Now, if you're trying to loan money to the American people, then you buy mortgage-backed securities, which is where a lot of this quantitative easing came from. A mortgage-backed security is basically a package that's got a bunch of houses in it, right? It's got a bunch of mortgages in it, and it's packaged into a securitized form that can be traded on a stock exchange. You can go buy them yourself. You can go buy a mortgage-backed security, and you're basically buying something that tracks with the interest rate that is paid on these mortgages. And they're sold. So when you got a mortgage with your bank, if it was a small bank, they almost certainly immediately sold the mortgage to someone else. That mortgage company that holds your mortgage has two customers, not just one. You are one of their customers. You hold the mortgage and you pay them interest, but you're not their only customer, and you're actually not the more important customer to their business model. The more important customer is the stock market and the investing public who buy the mortgages that they package into mortgage-backed securities. And so when the Federal Reserve prints money through quantitative easing, they then use that fake money to buy mortgage-backed securities, which props up the market for mortgage-backed securities, which props up the housing market. Some of those profits get sold and reinvested into the rest of the stock market. So quantitative easing leads to increased government expenditure. When the government spends money, they have to pay people to do it. So you create jobs, you create economic growth and development. And when you put money into mortgage-backed securities, then people end up taking the profits and they end up investing in other things. They buy Apple, they buy stock, they hire new employees, whatever. And so on the surface, it seems like a good idea. The issue is it's not real money, so it leads to inflation. Here's the deal. This quantitative tightening is coming to an end. Why? Because they want to have the inflation back. They want to drive an artificial growth in the stock market. Quantitative easing, remember, is what you do when you want to drive the stock market higher because you want to go down in history as somebody who had the market going up under them. Jay Powell. Well, if you'll notice, now we're tying all this together. If you'll notice, the U.S. stock market is not doing that. It's going through a crash right now. And it's probably going to continue because of what Trump is doing with all these tariffs. Like them or hate them, fact of the matter, they're not great for the market in the short term. I'm not saying I even disagree with them. I'm just saying they're not great for the market in the short term. That doesn't make Jay Powell look very good. And it's also not very popular with the American people to have the stock market going down, which means that quantitative tightening, the rolling off of the T-bills and the mortgage-backed securities, is no longer a popular position, even though it's theoretically making the dollar stronger. So quantitative easing is probably on the horizon to bring about a resurgence in the United States stock market, which will likely lead to lower interest rates, cheaper money, and the continued dissolution of the United States the United States dollar as a strong currency. Quantitative easing is likely on the horizon as a result of everything that we just discussed, which will likely lead to a major rally in the stock market, which will likely end up leading to the devaluation, the continued devaluation of the United States dollar, which will then likely lead to more people eyeing Bitcoin. It's a double whammy. You've got QE that is going to drive a stock market rally. You've got QE, which is going to put more money in the hands of a government that is pro-Bitcoin, that wants to buy Bitcoin, but needs to find the money to buy Bitcoin. Oh, wait a second. What happens if the Fed starts printing money again and loaning money back to the government? It's probably what's going to happen. And then you've also, of course, got the impact of a weakened dollar because of the inflation that will take place on the inflation that will take place as a result of the quantitative easing, leading to more interest in Bitcoin because people are tired of inflation. In other words, that was a lot of technical. I understand I just took you through a master's level class on economics and the Fed. In other words, inflation is going to go up because of tariffs, which will make the Fed increase QE, which will lead to a growth in the stock market, which will lead to a devaluing of the United States dollar, which will lead to increased interest in Bitcoin. Where have we seen this before? We saw it here. Bitcoin rallied 568%. If Bitcoin in the short term can be responsible enough to stay between $73,800 and $91,000 for a couple of more months, we are primed for one of the largest rallies that Bitcoin has ever witnessed. Do I like that the Fed is manipulating the market? No. I wish we could abolish the Fed, and while we're at it, ban debt for any other reason than somebody's dying as a nation. Israel had a lot of things wrong. One thing it didn't have wrong, not because they didn't have a perfect law, but because they wouldn't follow it. One thing they didn't have wrong is that they were not allowed to charge each other interest. Nobody got rich in banking in ancient Israel. You ever notice that? Nobody got rich in banking. We brought that back as a society, we'd be a lot better off. I would rather pay $1,000 a year to own a bank account than have them loaning out my money and screwing somebody else over by putting them into slavery. Nevertheless, their ivory towers are built and they're probably not going anywhere. So the Fed is a fact of life, and what they're doing impacts our markets. And what they're doing looks like it's going to end up sending Bitcoin onto a massive rally. So now that we've got all of that, we had to talk about the current market. We had to talk about the future, which is basically how we run every stream. What do we do? This is where I want to talk about dollar cost averaging versus lump sum investing. What do we do? The only way that I give advice is, one, if somebody asks for it, which you did, you clicked on the video, that's why I'm giving you advice. If you don't want the advice, then you shouldn't have clicked on the video. And two, I give advice from the perspective of what I would do if I'm in your shoes. So the best way I can explain whether you should dollar cost average or lump sum is just simply tell you what we do and try to defend it and explain it. We dollar cost average every single day, a certain amount, and it's a large amount of Bitcoin every single day. So that we are constantly acquiring new Bitcoin. We dollar cost average a much smaller amount, but still a considerable amount of a few other coins. Right now, that's mainly Solana and Cardano. We were dollar cost averaging Ethereum, but to be totally honest with you, I am starting to lose some of my confidence in ETH. I do think it'll hit $5,000 and return to all-time high again, but I don't know that you're going to get the same kind of returns in it as you will in some of its competitors. Because the only reason it's still number 2 is because of its network effect, not because of its technology. And that's a flimsy foundation for long-term investment. What we do is we dollar cost average every single day, every day. And then we buy the lump sum also. We do both. So really, I think it's not a problem of which way should you go. I think it's more of a problem of the question itself. Should you dollar cost average or lump sum? To that, I say yes. In a market that you actually believe in, I just say yes. That's what we do with our retirement portfolios also. We put a certain amount into our retirement accounts every month, and then if the market crashes like it did, then we buy the debt. Like the other day, we bought a considerable amount of stocks over in the brokerages at 552. I believe our entry was 552, right? It's probably not the exact bottom. We may continue lower, and if we do, great, we'll buy more. What we do is we set it up where we can afford to dollar cost average every day. And we also save some cash and buy the dip. And so basically the way this works is that we have two accounts, two types of accounts, right? We have a little T table here. We got our cash accounts and we have our investment accounts. And over in our investment accounts, we have different, maybe instead of looking at the accounts, we'll just look at the examples. We've got, BTC, ETH, Solana, etc. ADA, 20 or 30 different coins that we keep track of. Then we've also got a cash account, right? We got dollars, we got, USDC, whatever it is. And so from our cash accounts, we drain them every day to do our dollar cost averaging. But I don't ever let these accounts get too low. This is not our emergency fund. This is not the E-fund for the company or for personal. We have a 6-month emergency fund for our company and personally. By the way, we work in the crypto market. They're very brutal bear markets. That's what we got to do. Keep a lot of cash. It allows us to make good decisions. We have cash on top of that we then invest out of every day. But we never let this number get too low, because if the market flash crashes like it did recently, then we buy the dip. We bought thousands and thousands and thousands and thousands of dollars on the dip a couple days ago in Bitcoin and in stocks. And the reason for that we were able to do that is because of this setup. And you might think, Jeb, well, I don't have that much money. You don't need that much money. This cash account could have $20 in it, and you buy 50 cents a day. For 50 cents a day, you can buy a whole Bitcoin after 100 years, right? It can be any amount. But after you've walked through the financial sovereignty way, you've got your debt paid off. You've got your 3 to 6 month emergency fund for your company and for your personal. If you don't have a company, that's fine. Then it's just your personal. After you have that set up, after you've got your budget, after you're living on less than you made, all of those things are fulfilled, and you're investing for retirement, 15% of your household income for retirement every single month. Then when you're investing for extra wealth generation, then you have two accounts. You have a cash account, a C account, and an investment account, an I account. And so out of this cash account, you drain it every single day into your investments, every single day, you dollar cost average, but you never let this number go too low. Never let it get too low. You leave a cushion in there so that if a dip comes, then you take advantage of it. That is a much lower stress way to approach the market than this, which is what most people in crypto are doing, and it's stupid. This is what most people in crypto will tell you to do. Oh, well, you just need to buy my fancy training course. It's $4,997, and I'm going to tell you how to predict exactly where the bottom is so that you can buy it when it gets here. Man, all of a sudden you have no time for anything else because you just spent the last 14 hours a day for the last 3 months trying to figure out where the bottom is. I don't give a crap about where the bottom is. I do it. I do the technical analysis. I would like to know. But for me, it's not about, let me put it this way. I don't have to predict where the bottom is. I do, and we normally get it right, but I don't have to. I sit here and wait for us to hit a low level, and then I buy. If the market's up, I buy. If the market's down, I buy. If the market's down, I buy more. Make sense? I just buy more. Opportunist. Stop overcomplicating it. The reason you don't have any investments is not because you didn't get the right entry. It's because you have no money. Maybe you need to get a job. Maybe you need to stop living in grandma's basement and pretending you're some financial guru. Go flip burgers. After that, go be I don't know, an assistant at a CPA firm. I have no idea. Go make some freaking money. Go provide some value into the marketplace. The marketplace will say thank you with greenbacks. Turn them into Bitcoin because orange beats green, right? But maybe the reason that you don't have an investing structure set up, and you don't know what you're doing with money is because you don't have any money. Maybe it's because you're drowning in debt. Maybe it's because you think that you can keep living in grandma's basement, or you can keep living in mom and dad's attic and get somewhere with money. It ain't going to happen. You need to get out on your own feet. You need to go look in the refrigerator and say, I bought that. By the way, I also bought the refrigerator and the house. You need to go build something for yourself. Quit playing 8 hours a day of video games. I'm talking to most of my history, right? Jeb, it's not that easy, bro. No, it's not easy. There ain't a darn thing about this life that's easy. But being broke isn't easy either. I'm not saying it's easy. My God, I got kids. I got a wife. I got a house. I got a business. I got a family. I got all kinds of stuff. I know that it's not easy. I know it's not easy. I busted my chops to get this channel off the ground. We didn't make a penny for 8 months. Worked on it all day, every day for 8 months and didn't make a dime. I was very blessed that my dad was providing for me because I was 17 at the time, so I could do that, and everybody doesn't have that opportunity. I understand that. But you got to put some elbow grease in. The reason that we have what we have today is because of decisions that we made 8 years ago and the abundant blessings of God. I understand everybody doesn't have the same starting position. I understand everybody doesn't have the same abilities. What I do also understand, though, is that you have the ability to go out there and do something about it if you put the right principles in place. If you want to have an investment set up, if you want to watch your portfolio grow every single month, you can do it. You can do it. But you've got to make a choice right now to go stare down the guy in the mirror, the gal in the mirror, and say, I'm in charge now, not you. Your dumb habits will not rule me anymore. Your obsession with Starbucks will not rob me from future prosperity anymore. Your obsession with video games will not rob my future prosperity anymore. Your obsession with drugs will not rob my future prosperity anymore. Your obsession with going out to the clubs 4 nights a week and having no energy and getting drunk every night will not rob me of my future anymore. You've got to go and make a decision. Ali retracted his message, so I'm not going to read it because he apparently doesn't want it here, but I understand what you're dealing with there. I get it. I know life's hard. I do. Life is very hard, which is why we've got to choose wisdom. Jeb, making the wise choice is hard. I know. The Bible says, no discipline is pleasant at the time, but it produces a harvest of righteousness. You can rephrase that and say the same thing in a different context. No discipline is pleasant at the time, but it may produce a harvest of prosperity in the future if you put the work and the sacrifice in now. So, I've shown you what's happening in the short term. Given you a very comprehensive overview of what's happening in the short term. I've given you a very comprehensive overview of what's happening later on this year. We could be wrong. I don't think I am. I've also given you a comprehensive overview of what you ought to be doing right now. What's your next step? I got 2 challenges for you. Number 1, I'm going to challenge you to sign up for the Financial Sovereignty Academy. I'm going to teach you how to do this stuff. Guys, I have been more stupid with money than anybody else that you have ever met in your entire life. Jeb, how in the hell is that a sales pitch for me to listen to you and what you have to say? Because I've done it wrong every single possible way under the sun, I'm convinced at this point. And I have come to find out after walking through every pothole, stepping on every crack, falling off of every single cliff, that there is a way to do this stuff right. And we're proving that every day here on the channel. People's lives are being changed because of what we are teaching. Our life is being changed because of us walking the things that we teach. I have seen such a radical change in our marriage, in our family, in our peace, in our financial prosperity, because we actually now follow the financial sovereignty way. Have been for years at this point. I have made so many of the mistakes that other people are too scared to tell you that they've made because they're not humble. They're trying to arrogantly prove to you that they know what they're talking about by pretending that they've never made a mistake. I'm honest and humble enough to tell you we've screwed a lot of things up and learned how not to. We've learned exactly what you need to do, and now we're doing it. And it works. So my first challenge to you today is I want you to sign up for the Financial Sovereignty Academy. Jeb, you're just trying to sell me a course. No, I'm trying to sell you a future. You can change your life. Jeb, you're just trying to make some money. No, I don't care about that. I have a business to run, and we obviously have to, do it, right? We have an editor to pay. We want to grow this thing. I'm a capitalist, and I'm not sorry about it. I want to teach you how to succeed with money. I got to walk by example, don't I? Sign up for the Financial Sovereignty Academy. We've got a ton of content over here. By the way, week 9 is being uploaded today. Mainline Investing for Extra Wealth Generation. This video is phenomenal. Just watched the finished product yesterday. It's great. Stay tuned. Watch out for that. We've got a bunch of more content coming to the Financial Sovereignty Academy. I'm going to teach you the steps, the 10 steps of the Financial Sovereignty Way. It is a proven process that will help you go from where you are today, which is probably not where you want to be, to where you need to be so that you can have peace, prosperity, you can hang your head well at night. The Bible says in Proverbs chapter 3, that when you lay down, you shall lie down in peace and you shall not be afraid. That is one of the blessings of wisdom. When you lie down, you shall not be afraid and you shall sleep in peace. That can be yours. on the other side of discipline, which is not pleasant in the time, but produces a harvest of righteousness, but produces a harvest of good sleep, but produces a harvest of peace, but produces a harvest of better relationships because you're not a stressed out basket case every day. It produces a harvest. And if you put the work in today, you can change. I encourage you to sign up for the Financial Sovereignty Academy with the link in the description box down below. If you have not already, I'm going to teach you everything that I know to succeed with money. And as you go through the Financial Sovereignty Academy, you will realize that we know what we're talking about. And when you walk this stuff and when you actually do it, it will radically change your life for the better. And you'll walk through it. And some of it, you're going to be like, Jeb said that. What's the point of that? And you're going to do it. And you're going to say, whoa, you were right. I wish I'd have done that years ago. We get it all the time. Sign up down below. Second thing I'm going to challenge you to do. He slept in peace under the sun. That's the sunburn. Yeah, that's pretty good. The second thing I'm going to challenge you to do is I'm going to challenge you to go take about 10 minutes with a mirror. I'm going to challenge you to do something that I do sometimes when I really screw up. I'm going to challenge you to go and do what you don't want to do, and that is look yourself in the eyes. You know that feeling when you make a really big mistake and you can't even look at yourself? I'm going to challenge you to do it anyway. Go find a mirror in your bathroom, wherever. Look straight into your own eyes. Make eye contact with yourself. And look into your very own soul and see that you're not enough and you don't have this all figured out and you need Jesus to help you. The financial sovereignty way is completely rooted in the 7 laws of money, which are biblical. You can't do this. You need Jesus, and you need his teaching. And he came and he died for your sins to save you on the cross for free as a gift because he loves you. And in his word that he wrote for us through his prophets, he taught us a lot of things about money. And when you actually do them, your life will change for the better. Make no mistake, God's blessings are on the other side of obedience. Why isn't God blessing me? Maybe because it's not going to be good for you if you get blessed right now. Maybe because the blessing that he wants to give you would kill you if he gave it to you right now. I mean, think about it. What if God handed you $500 million? What would it do to you? What kind of arrogant prick would you or I become? How puffed up with pride would I become if God just handed me $1 billion? I mean, my goodness, I have to mature before I have $1 billion. I'm not mature enough to hold $1 billion. I'm mature enough to hold millions of dollars. I'm not mature enough to hold $1 billion. I have growth to do. Just like you and I. I encourage you, look yourself in the eyes and see that something needs to change. And then, before you walk away from the mirror, make a commitment that you're going to. Make a commitment that you're going to make a change. Whether that's with me or with somebody else, but make a commitment that something's going to change. It's going to change for the better, and you're actually going to follow wisdom. Because if you do, you will be so glad. You will be so very pleased with yourself when you look back and you say, the reason that I am here today is because of the blessings of God and because the blessings that I gave myself by following God and what he says. The 0th law of money cannot be forgotten. It is not your money, it is God's, so obey him. Why? Because he loves you and he wants to bless you. And if you obey him, then you will be blessed. Does that make sense? I tell my son not to walk out in the street. Why not? Because I don't want you to get hit by a car. I tell my son to be kind to people. Why? Because I want you to have friends. Why does God tell us to avoid debt? Because he wants us to have peace and because he wants it to not lead to stress and spiritual pain and anguish. Why does God tell us to save and invest for the future? Why does he tell a farmer to store up grain in a silo for the winter when the winter comes so that he doesn't freaking starve? It's common sense. Number one, I encourage you to sign up for the Financial Sovereignty Academy so I can teach you this stuff on a much more intimate level than I could ever do here on YouTube. And number two, I encourage you to go take a date with a mirror. Take 10 minutes, stare at your very own soul, look straight through your pupils and see your very personality and realize some things have to change. And you can do this, but you're going to need some help. Ask God to help you. I'm happy to help you. And I know you guys can do this. Let's read a little bit of chat. We're going to wrap it out. You got this. You're going to be okay. But you have to make the right decisions now. Elvis said, Jeb, the problem with courses when it comes to trading and investment is 80% of people lose money regardless. Statistics don't lie. Yeah, the statistics don't lie because people think it's all about buying the right stock. It's a lot more complicated than that. That's why the Financial Sovereignty Academy actually works and all those don't. Here's the deal. You know, people sell this trading course and say, I'm going to show you how to make 10%. We're going to buy the stock at $24. We're going to sell it at $25. We made $2. Then we're going to buy the stock at $38. Then we're going to sell it at $42. We made $4. And then we're going to buy the stock at $50. We're going to sell it at $55. We made $5. Oh my gosh, we made, what's that? $11, $10, $11? What numbers did I say? If you had just bought it and held it, you would have made so much more. I'll teach you how to trade. Most of the time, you're going to make more money investing. Derek said, Jeb, what are you doing with ETH right now? I'm holding our entire position, and I stopped our dollar cost averaging on it. If it goes really low, I might take a lump sum investment and resume the dollar cost averaging. I'm not against it. I just have some issues with it right now. I'm not. Ethereum is a juggernaut, and I don't want to take that away from it. We do have a very large position in ETH that we've held for a very long time, and I don't plan on selling it unless it's at a high. But I am starting to get concerned. Ali repeated the message, so I can go ahead and read this. In Pakistan, men are expected to not only feed themselves, but alone take the financial load of entire families, extended families, and even weaker segments of communities due to religious obligations. It is a very, there is a lot of work that goes into being a man, into being a provider. And sometimes people can take that too far and they can neglect the man's health. And that's hard, for sure. And I don't know anything about Pakistani culture, so I definitely don't want to comment on it. But what I will say is it's difficult. It's very hard. Bearing the entire financial obligation for other people is difficult. It's not easy, and it takes a lot of sacrifice. Remember, though, that Jesus showed his love to us by sacrificing for us. There is no love without sacrifice, and the Bible says that there is no purer form of love than to lay down your life for your friend. The truest form of love is to give your life for someone else. So just know that although it's difficult, you are showing love by sacrificing for them. So good for you for that, and honor and respect to you for that. All right, let's see. Shout out to Kelly. Make sure to check him out. Appreciate all of you guys for tuning in. If you've not already, I want you to do a couple things. Sign up for Lux Algo. It's going to help you understand the markets. Also, of course, though, make sure to sign up for the Financial Sovereignty Academy. I will help you to forsake the foolishness, declare war on the chaos, and choose to be financially sovereign. And stay tuned, because we have some community features coming that you guys are going to really love. You guys have been asking for a lot of things, and they are on their way. We're going to have to wrap it out. We went a little bit over time, but I thought it would be helpful today to go over some more of this stuff in more depth, short-term, long-term, and what to do about all of that information. I appreciate you all being here. Share this video, share this stream with someone that you think would benefit from it, and we're going to wrap it out. Before I go, I love you. I want to see you succeed. I promise to only ever, with good conscience, speak the truth as far as I'm aware, and help you guys in any way that I possibly can. My heart is for you. I want you to succeed, and I know that you can. You got this. You just need the right training. You just need the right teaching. I mean, hey, that's the whole idea of discipleship, right? Someone who knows more than you do coming along and helping you to grow. I know what I'm talking about with this money stuff, and I want to help. So make sure to sign up for the Financial Sovereignty Academy. Stay tuned. Share this content with somebody that you think would be blessed by it. And before I go, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.